Everyone, Adam Bergman here, tax attorney and founder of IRA Financial. And on today's live video of the week, breaking IRS news, tax treatment of NFTs, non-fungible tokens. So wanted to do something on this topic. Didn't want to wait till Wednesday. This is an important topic. It's the first time the IRS is providing any guidance on the tax treatment of NFTs. And it's not just important for individuals, it's also important for retirement account holders, especially for retirement account holders. Why? Because we know under Internal Revenue Code Section 408, an IRA or a 401k is not permitted to invest in a collectible. By the same token, like that, and by the same token, right? Pretty good. An individual who has gains from a collectible is subject to a higher capital gains tax rate of 28%. So if you have a regular capital asset transaction, it's 15% or 20% if you're a high income taxpayer. But for a collectible, it's 28%. So this is meaningful for both individuals and retirement account holders. So on today's video, I'm going to go through notice 2023-27, which was released in March 21st, 2023. It's really the first guidance from the IRS on the tax treatment of NFTs. Now, I give the IRS a lot of credit because what they've done is they've essentially put this notice out there, which is about 5 pages. But they said, hey, we're going to request comment because, this is a unique and novel asset. NFTs are new, right? The whole idea of a non-fungible token. And I'll go into what exactly it is, what the IRS defines it as, and then I'll talk about some of the more common NFTs. And instead of just saying, hey, we're going to put forth formal rules and procedures based off what we think an NFT is and what we think it should look like from a tax perspective, we're going to ask the public, you, for comment. And they're giving us all comment up until June 19, 2023. So for the next several months. And they posed several questions that I'll address and asked, hey, give us some help. And I think that's wise, especially because it's such a unique asset. It's important that the IRS wants to get it right. And I give them credit for doing so. They could have easily just set forth, hey, here's the black and white. Here are the rules for NFTs. This is how they're treated. This is how we want to treat them. That's it. Instead, they said, hey, these are our thoughts, and we'll get into what their thoughts are. And they gave actually 2 examples, which are quite helpful. And then they actually said, okay, let's now ask for help. And I give them a lot of credit for that. So let's start with the notice. As I mentioned, it just came out March 21st, 2023. Notice 2023-27. Not a very difficult notice to read. So if you're interested, I will actually copy and paste it into the chat. It's actually pretty easy to read. And I think the IRS did a really nice job on it. So before we get into the meat of it, let's talk about what an NFT is. And then we'll talk about what a collectible is. And then we'll put it all together. So this is a definition of an NFT from the IRS. An NFT is a unique digital identifier that is recorded using distributed ledger technology. It may be used to certify authenticity and ownership of an associated right or asset. Ownership of an NFT may provide the holder a right with respect to a digital file, such as a digital image, digital music, digital trading card, digital sports moment, that typically is separate from the NFT. Alternatively, NFT ownership may provide the holder a right with respect to an asset that is not a digital file, such as a right that is in different forms. So it's important definition, and since it's such a unique asset, there are various definitions, right? Because you can get a right to attend a ticketed event, certify ownership of a physical item. Right? We heard about NFTs certifying land transactions, or maybe a membership in a club, or even a ticket to an event. So it's important to understand the most common types of NFTs. So we all know about the photo, artwork, sports highlight, music NFT, right? Those are the basic artistic NFTs. And we'll see in a minute that the IRS is basically saying, okay, when you look at an NFT and the digital technology surrounding it, the easiest way to determine whether that digital file is an NFT is to look at the underlying asset. And they call that the look-through rule, which actually makes sense. And we'll go through a couple examples in a moment. There's also a different type of NFT called a utility NFT, where it provides some utility, like a membership into a club, right? Or you have some benefits if you hold this NFT, maybe a discount on crypto trading, maybe a discount on souvenirs from your favorite rock band. Also, we've heard of stories where musicians are selling NFTs of music, giving them a royalty every time that NFT is sold in the future. So again, a unique, distinct, novel asset. And the IRS is trying to figure out, is it a regular capital asset, like a piece of real estate, an equity, a stock, or is it a collectible like a piece of art? So now that we know what an NFT is and what some of the common NFT types are, let's go into what is a collectible. Now, Internal Revenue Code section 408M, as in Michael, essentially defines what a collectible for retirement account purposes. Although that definition is linked into the idea of a collectible under section 1 for whether that asset is treated as a capital asset / collectible, which comes with a higher capital gains tax rate, which is 28%. So based off the Internal Revenue Code section 408M, a collectible is any work of art, any rug or antique, any metal or gem, stamp or coin, any alcoholic beverage, or any other tangible personal property specified by the Secretary for purpose of the section. There's a special carve out for pure bullion, precious metals, gold, silver, palladium, bullion's 0.99% finesse, as well as bullion coins, state minted, and American Eagle coins. Those are not treated as collectibles. Okay, so now that we know what an NFT is, we kind of know what a collectible is. Let's put it all together. What does Notice 2023-27 talk about? What's the intent of this ruling? Or I should say of this notice. So essentially what they do is they give us some framework, some guidance as to how they're going to determine whether an NFT is either a capital asset or a collectible. And essentially the main test this notice goes into, I mentioned it before, is called the look-through analysis. And basically what they want to do is they say this: if an NFT constitute a section 408 collectible, if the rights associated with that asset are a collectible. Okay, so they give an example where if you have an NFT that certifies the ownership of a gem, is that a collectible or is it not? So if you go back to the definition of 408M, we know a gem is a collectible, like a diamond. So under the look-through analysis, it says this: if the NFT is certifying digitally the ownership of an underlying asset, and that underlying asset is a collectible, like a gem, the NFT is a collectible. And that's the whole foundation of the look-through analysis test, which honestly makes a lot of sense, right? If you have an NFT that gives you digital rights or digital certification or digital utility, you need to look at the underlying asset. What's it connected to? What's that digital right connected to? If it's connected to a collectible under 408M, then the NFT is a collectible. So they give the analysis and the example of a gem. Now, instead of a gem, you can use artwork, you can use music, you can use imagery. Since under section 408M, art is defined as a collectible, an image, a meme, probably artwork, coin, a card, a baseball card, basketball card, probably a collectible. So if you own a digital right and that underlying asset is a piece of art, an antique, a gem, a card, a coin, a meme, is probably going to mean that that NFT is going to be treated as a collectible. Now, on the flip side, they give an example of someone that owns a plot of land in a virtual environment. And they basically said, hey, if you have an NFT that certifies ownership of land in a virtual game or virtual environment, because that virtual plot of land is not defined under 408A as art, antique, gem, coin, beverage, or other tangible property, it's not going to be deemed a collectible, and thus it can be purchased with an IRA or 401k and can be purchased personally and subject to regular capital gains treatment instead of the heightened tax rate of 28% for collectibles. So these examples are very, very helpful because it gives you an idea of how the IRS is going to look at whether an NFT should be treated as collectible. The look-through analysis is a really smart way of doing it. And it basically, again, summarizes to say this. You look at what the NFT is certifying or utility or providing ownership of, and then you look at that hard asset underneath it or that digital asset underneath it. And if it's a collectible under 408M, it's going to be deemed a collectible and the NFT will be treated as a collectible. If the underlying asset, like the real estate example, that plot of land in a virtual environment is not deemed a collectible as per 408M, then the NFT is not deemed a collectible. Now, the notice only gave two examples, but they're very helpful, right? Because they distinguish clearly between a 408M collectible, which is something that is identified in 408M, which is the gem or the artwork. And then they distinguish between this virtual piece of real estate, which is not identified under 408M, and offers now clear, concise rule that if you own an NFT of real estate, digital real estate, it's not treated as a collectible and therefore subject to the regular capital gains treatment and can be purchased with a retirement account. So I think if you take what the IRS has right now, what they've stated in this notice is basically this. If the underlying asset is identified in 408M, the NFT is going to be treated as collectible. If it's not, you're probably going to be okay. Now, something interesting they mentioned in a footnote is they said this. The Treasury Department, the IRS, currently believes that digital files are not included under any categories listed under 408M, such as a rug, antique metal. So remember, if you go back to 408M, which defines what a collectible is, it talks about the art, the antique, the gem, coin, beverage, and then under F it says any other tangible property. Well, we know a digital file is not tangible. You can't touch it. So they're basically admitting that, okay, NFTs are a new, unique brand of assets. They're not covered under 408M2. So we need to now come up with some rules to determine whether that digital file is going to be deemed a collectible. Because the rules right now, as written, don't do that. And that's where this look-through analysis comes in and basically says, okay, if you own an NFT of a piece of art or a baseball card or a basketball card or a meme, probably going to be a collectible. If you own an NFT of a virtual plot of land, maybe a utility type token that provides you other rights or something that's more akin to a security, probably not going to be deemed a collectible. So they basically stopped their analysis of that and through the look-through analysis, say, okay, this is where we're going to stop. And before we continue, we need help. So public, you and me, we need some help. Please send us your comments. Now, one thing I want to add about the look-through analysis is I think it gives insight into NFT funds. So let's say you invest in an investment fund, whether it's a hedge fund or a crypto fund that owns NFTs. Under the look-through analysis, can you invest in that fund? So the look-through analysis is very similar to the pass-through look rules under the plan asset rules. Excuse me. And under the plan asset rules, we basically determine whether the assets of an investment fund or a business should be connected to the actual retirement account or pension plan investor. They have a 25% rule, meaning if the investment fund is owned less than 25% by retirement accounts, there's no look-through rules, meaning the IRA can own and invest in an art fund so long the less than 25% of the investors are retirement accounts. So from an investment fund perspective, if you have an investment fund that is involving NFTs, so long as less than 25% of the investors are retirement accounts, you're going to be good. The retirement account holder will be able to make the investment without triggering the plan asset rules, and the look-through analysis that the IRS presented in Notice 2023-27 probably would not apply because the plan asset rule, look-through rules would apply. But if you just focus on, and I think this notice is really focused on the individual who holds the NFT, the look-through analysis basically says, okay, look through what the digital file is certifying or owns, and then based off what that underlying asset is, you should be able to determine, is it under 408M? Is it an antique rug, gem, piece of art, or is it not? And if it's not, you likely will be able to purchase it with a retirement account. And if you purchase it personally, you will be subject to the regular capital gains tax regime and not the heightened 28% capital gains tax. So these are some of the questions the IRS is requesting us to provide comment on. Does the notice provide an accurate definition of an NFT, or are there other definitions should be used? With respect to the look-through analysis, are there instances in which there are concerns with applying the analysis? What burdens does the analysis impose? How might the analysis be applied to NFTs with more than one associated right or asset? How might the potential for the owner of an NFT to receive additional rights or assets under the NFT be treated? Are there other factors to consider when determining whether an NFT is a collectible? For example, whether a digital file constitutes a work of art. What factors might be used to determine whether an asset is tangible, personal property, particularly in the context of a digital file? What factors might be relevant if the NFT's associated right is less than full ownership of the asset? Does the application of Section 401 to an individually directed account under a qualified plan raise any issues other than those raised by the IRA? What other guidance relating to NFTs would be helpful? And then they give you an email or a website to provide your guidance, or you can mail it in by June 19, 2023. So it's really a very, I think, smart way of starting this conversation. And I give the IRS credit. Instead of just saying, okay, we know better than everyone, we're in the IRS, we're in Treasury, we're smarter than you, they said, okay, this is what we came up with at this point, and that's the look-through analysis. We think it makes sense, but we don't have all the answers. Why? Because this is such a unique and new type of asset class. So, hey, there's lots of smart people out there. Let's pick their brain. And you now have 3 months to come up with ideas or thoughts or opinions as to what other framework the IRS may consider in determining whether an NFT should be treated as a collectible. So this guidance, Notice 2023-27, sets forth the IRS thinking. It doesn't set forth any hard rules, okay? So if you're watching this right now or listening, and you're like, oh, I own an NFT in my IRA or 401k, or own it personally, what should you do? Well, I think you have some basic framework to gauge what type of asset your NFT may be treated as. So if you own an NFT right now of art or a gem right, an art right, a photo right, a music right, you're likely going to be deemed owning a collectible. Meme, right? Any type of like meme photo or artwork or LeBron James highlight, probably going to be a collectible. Baseball card, basketball card. If you just look at the reading of 408M, I think you need to look at yourself in the mirror and be like, okay, I own a collectible. Like, what do I do? You get it out of your IRA as quick as possible. You report it to the IRS. I probably would get it out, sell it, and move on right now because I don't think 23-27 is providing formal ruling. I think it's giving you their thoughts, And I think you have the next 3 months to get it out of your IRA or 401k. Or if you sell it now, it's up to you whether you want to treat it as a collectible from a capital gain standpoint. But I think once the final a final ruling and notice is undertaken by the IRS, that's where they're going to come down on. If you, on the other hand, you own a different type of NFT, like a utility, more of a equity type, security type, membership type, right? I think you're sitting pretty. I think you're okay. I think you can say, okay, I don't think it's going to be a collectible. I'm going to wait patiently and see, but I don't think I need to make any rash decisions to get rid of this asset right now. So it's a to be continued type approach, which I think makes sense because it's such a unique and new asset class. And I give kudos to the IRS for wanting to get it right, because at the end of the day, that's the goal. It shouldn't be just about putting out rules as quick as possible. They want to make sure they get it right. And they clearly stated in footnote number 4 that 408M right now doesn't deal with NFTs, digital files. So we need to come up with an analysis and a test that helps us determine whether someone's NFT asset is a capital asset or a collectible. And the look-through analysis is a great start. And I think ultimately that's where they're going to land on. But we'll be interested to see what types of comments they get from the general public. I know I'm going to offer some comments, especially more on the utility, the ownership, membership rights, how that's going to be looked at. I think it's been clear to everyone that if you own an image of the Mona Lisa and an NFT, that's clearly artwork. I think we all would argue that that's a collectible. But I was really, really excited that they used the example of digital land, a virtual land, which was always kind of gray to me, and I wasn't sure how the IRS would come down on it. And I'm super stoked that they basically are saying that it's not a collectible based off the example in the ruling. So that's a really, really positive outcome of this notice. So if you had to summarize, if I summarize how I feel, rate it 1 to 10, I'd put it at like an 8. Because again, I always thought that a piece of art or a meme or a music writer, a basketball card, football card, I knew they were always going to deem that collectible. But the fact that they're basically saying that virtual land in a virtual environment is not collectible, like, that's exciting, because from that there could be other utility type NFTs that will emerge that will be able to be invested through a retirement account, and if you own it personally, would be subject to the regular capital gains regime. So I put the URL for the notice in the chat. I recommend that people check it out. If you have comments, you should definitely feel comfortable with presenting them. You can always submit them to me, and I will submit them on your behalf through our organization. It's up to you, but I think it's important that the IRS hears everyone's thoughts and gets it right. And I think they're on the right track. And again, I give them a lot of credit for taking their time. It's a very thoughtful approach. Here's our ideas. Let's get more comment, and let's come up with a really, really, I would say, smart and also flexible type of rules that all make sense and we can all apply as the NFT marketplace grows and new technologies emerge. The rules should be flexible enough to capture new types of technologies and hopefully giving taxpayers guidance and some form of credibility, some form of knowledge, so that we can go ahead and make smart decisions whether that asset should be treated as a collectible or not. So that's it. I wanted to get this video out there. That's why I usually do YouTube lives on Wednesday. That's why it's important to subscribe to this channel, because sometimes I just go live on random days like today. And this is breaking news that dropped last week. I didn't want to do it on a Friday because I figured everyone had better stuff to do, the NCAA tournament, spring break, all the other fun stuff. So here I am Monday morning coming to you live with breaking IRS news on guidance on the IRS tax treatment of collectibles. They're not formal rules or procedures as of yet, They're waiting for further comment from you and me, but they're hinting at a look-through analysis type test where you look at the underlying asset of the digital file, whether it's a piece of art, a gem, or a virtual piece of land, and then based off the underlying asset, determine whether that digital file / NFT should be deemed a collectible or not, which obviously makes a big difference for individuals because a higher capital gains tax rate of 28%, and for retirement account holders who cannot invest in collectibles with a retirement account. So that would take out a chunk of potential NFT investments and move them to the prohibited world. So we'll see where it goes. Obviously, check out this channel for updates. I'm going to do a blog about this, do also a podcast because it's a super important topic. I get lots of questions on NFTs and what the IRS is doing with them. NFTs are not as popular today as they were last year, but there's still a growth marketplace, and there's still a lot of people that are super bullish on the future of the NFT marketplace. So we now have at least a little bit more guidance and further IRS guidance to come in the coming months. So thank you for watching. Really, really appreciate it. And I'll see everyone again soon. Take care and have a great rest of your day.